Okay, we are recording. Hello there, everybody. I am doing this recorded lecture for problem 13B, which was one of the problems included in our chapter 1 in class exercises. And so I want to go through that together and get a little practice with that and then kind of give you a little bit of an insight into where we're going in chapter 2. So I'm going to share my screen with you and get this Excel file pulled up. So again, this is the chapter 1 in class Excel exercises file. And we've got it set up here for this problem. This is problem 13B. And so this one, it is a law firm. The problem says, by the way, page 45 of our textbook, but the problem says, P. Schwartz, attorney at law, opened his office on October 1. The account headings are presented below. Transactions completed during the month follow. So we've got these transactions, letter A through M, and I've got them copied here into our file so we can see those as we're going through. So the first one, letter A, it says Schwartz deposited $25,000 in a bank account in the name of the business. So 25,000 cash is going up. And then again, this is the owner's investment into the company. It represents the owner's capital, right? So capital is also going up. Remember, here's our equal sign right here, okay? So for this equation to remain balanced, we have to have at least two sides of the transaction, right? That's that double entry accounting that we're going to talk more about. But letter B, bought office equipment on account from Quipco. So remember that on account, right? That on account means that we did not pay cash, right? On account means that we did not pay cash. We created a debt, which is our liabilities, okay? So office equipment is going up 9,670, but also now we owe that money. So liabilities is going up 9,670. So that's what we would look like for letter B. And I guess once we get these in here, we could, if it helps us separate it, do these borders on here. That's just the bottom border on each one of them. I don't know if that helps. Okay, letter C, Schwartz invested his personal law library, which cost $2,800. So just like letter A, the owner is making an investment into the company. Instead of the cash asset, though, the owner is investing his law library. So this is 2,800. So library is going up 2,800. And then also, again, just like when we invested cash, when the owner invested cash, capital is going up 2,800. Okay. Letter D, paid the office rent for the month, 1,700. So we're paying our expense. This is a rent expense. So just like when you or I pay a bill, right? Our cash is going down 1,700. The other side of this transaction is the equity. So when we incur expenses, that reduces equity, negative 1,700 on equity. Again, always two sides, always at least two sides to the transaction. As we have seen, sometimes it's more than two, right? Sometimes it's 3 or 4 accounts that are being impacted. But in this case, 2 accounts, right? So letter E, bought office supplies for cash, 418. All right. So supplies are going up, 418. And we paid cash for these. So cash is going down, 418. That's what we would look like for letter E. Okay, letter F, bought insurance for 2 years. Okay, so we paid cash for this. I know it says check, but it's treated the same way. It comes out of our bank account, so it's a negative to cash. And so we bought insurance. So This is our prepaid insurance asset. So we've got insurance going up 944. And again, we paid cash for this, so negative 944 is what that one would look like. Letter G, sold legal services for cash. So remember, we're a law firm. This is an attorney that started their own business, so we're a law firm. And so this is us earning revenue, right? Letter G, we're earning revenue. So letter G, sold legal services for cash. Okay, perfect. The customer paid cash. So cash is going up 85.18. And the other side of this is revenue is going up. When we earn revenue, that increases equity, right? When we have expenses, that decreases equity, but when we earn revenue, that increases equity. So that's an increase. Okay. Letter H, paid the salary of the part-time receptionist. So this is an expense. And actually back here, I didn't put down this 1,700. This was rent expense. Okay. Now letter H, we're incurring a salary expense, right? We're paying the salary of the part-time receptionist. So we're incurring a salary expense now, letter H, 1,820. So we've got a negative 1,820 to cash. And then this also, because we're incurring this expense, decreases our equity, 1,820. So that's what that one would look like. Okay, letter I, received and paid the telephone bill, 388. So this is another expense. So this is going to be treated, just like letter, what is that? Letter D, just like letter D when we paid the rent expense, just like letter H when we paid the salary expense. Now we're paying the telephone bill. So negative 388 to cash. And we can tab over here, negative 388 to the expense. And this is a telephone expense. All right. Letter J, received and paid the bill for utilities. Okay, good. This is another expense. We did this in letter D. We did this in letter H. We did this in letter I. Now we're just paying a different expense, but it's negative 368 to cash. And when we incur those expenses, that decreases our equity. So this is utility expense. Okay. Letter K is our next one. Sold legal services for cash. So remember, we did this, and let me get my highlighter out. We did this back on letter G. Okay, back on letter G, we sold legal services for cash. Here's how we handled it. We had the increase to cash. We had the increase to revenue. And now we're just doing the same thing again, right? We sold legal services for cash. So same thing again. We've got the increase to cash, 92.60. The increase to revenue, 92.60. Perfect. All right. Letter L, paid on account to Quip Company. Okay, let me erase this and I will highlight this Quip Company. So remember this Quip Company, this was back here, letter B. We bought office equipment on account from Quip Company, $9,670. Now we're making a payment to them, $2,600. So we're paying on account. So we bought it on account. Now we're paying on account, right? We're making a payment. So just like if you or I were to pay on our credit card bill, negative 2,670 to cash. And now negative 2,670 to the liability. So again, when we purchased this asset, right, this was office equipment, When we purchased this asset, we had a positive, an increase, right? We purchased this asset, then we increased our debt. We increased what we owed. Now we're paying some of it off, so we're decreasing it. It's a negative. And hopefully our brains are thinking, and I know we haven't totaled up each column yet, we're getting there, but hopefully our brains are thinking right now this balance is 7,000, right? 9670 minus 2670, right? So that balance down to 7,000. But anyway, we're getting there. We're going to total up our columns. We've got one more. So letter M, Schwartz withdrew cash for personal use, 2,500. Okay, negative 2,500 to cash. And this is an owner drawing. So we see it right here in this column. This is our owner drawing. Just like expenses, this decreases our equity. The owner's taking money out of the business, so that decreases our equity. Okay, now we've got each row filled out, all transactions A through M. And so just like we've seen in class together, the next step is to total up each column. And so I'll do this a couple times for us to remind us what this formula looks like. And so let me blow this up a little bit here. Oh, good grief. Right, so we want to total up each one of these columns. All right, so we're going to say equals the sum. We're going to start our parenthesis, right? So equals the sum, start our parenthesis, and grab that range, and then close the parenthesis. Right, there's our formula. Equals the sum. We started our parenthesis, grab that range, highlight over that range with your cursor, and then close the parenthesis. So 31,970. What is the check figure they give us? The check figure is like the total assets. So anyway, remember we said too in class, I'm going to enter this formula one more time and then I'll drag it. But remember we said when we got that little green, oh, hot dog, I just covered it up. When we've got that little green square in the corner, that's showing us, we've got a formula in that cell. And remember, like we said, we can highlight over that little green square with our cursor, and we can drag that formula across and it'll populate that formula for us. I'll enter it in one more time so we can see it, and then I'll just drag it and finish it off. But again, if we were trying to total up this entire column, we would say equals the sum. We would start our parenthesis and then just select that range. Close the parenthesis. 418. Again, we've only got that one transaction in there, and that's fine. We did the whole cell. If we were to double, or we did the whole column, right? If we were to double click back on that, it would show us that formula in there. Same thing with this one. If we were to double click, it would show us that whole formula, right? Now, if we want to, we can highlight our cursor over that green cell and just drag it across. And it's putting the formula into some of the cells we don't need. Like this one, obviously, we don't have any information in that cell. We don't need that one. We don't need these columns that are zeros either. There's no data in there is why it's coming up as 0. But otherwise, it calculates each one for us. We can see here's that balance of 7. And if we were to double click on that, it would show us that it's summing up or adding up that column. Same thing here, right? It's adding up that column. Same thing here, right? So that's a nice function in Excel. So now we want to look at, okay, we've got each column totaled up. Now we want to make sure that total assets equal total liabilities and equity, right? That's that basic accounting equation. Assets equal liabilities plus equity, right? We saw that on the board the past couple weeks. So total assets equal cash plus supplies plus prepaid insurance plus office equipment plus library. All 5 of those are our asset accounts, right? 45,802. And that is the check figure they give us in the book. So that's good. Now we want to total up, here's liabilities and equity, right? Now we want to total up liabilities and equity. We want to make sure that that equals. So equals liabilities plus owner capital minus the drawings, right? Drawings, it's a negative number, so it's going to subtract it. Even though in the formula we put plus, it's subtracting it because it's a negative number. So plus revenue plus expenses, which again, it is subtracting expenses because expenses is a negative number. In the formula, we say positive, but again, it's subtracting, right? It's a negative number. And 45,802. So again, we make sure, right, that total assets equal total liabilities and equity, and they do. Perfect. So that's beautiful. That's wonderful. That's what we want. That's what we have been doing in class together. So I want to show you now real quick where we're going in chapter 2, right? Because in chapter 2, we are continuing to get practice with this framework. But in chapter 2, we're introduced to the financial statements. So that's what I want to show you real quick on this is our financial statements. So if I zoom out a little bit and I can show you, I've already got the format for these here. So we've got 3 main financial statements that we're going to talk about in class together, right? 3 main financial statements. And the first one is our income statement. That's right here. So number 1, income statement. And this shows our revenues and expenses. Then is our statement of owner equity. That's the second one that I have formatted there for us, statement of owner equity. And then the third one here is our balance sheet. So these are the 3 main financial statements that we're going to be learning together in this class. And for each one of these, we get this information from this framework that we've been filling out, right? Okay, so let me zoom back in here a little bit and scroll back up. So here is our revenues and expenses, right? If we go back here, excuse me, we look at our income statement. The income statement includes revenues and expenses. And that information is right up here. Here are our revenues and expenses. And that flows down to our income statement, right? And so our formula for this income statement, just like, and I just said it a moment ago, we take our revenue minus expenses, and that equals net income. Revenue minus expenses equals net income. So that's our formula. And again, we've got those accounts up here. We've got that information up here. And so we'll scroll down here. And we've got legal fees, okay. Legal fees are equal to $17,778. Let me expand this column a little. Okay. And then if we scroll up, here are all of our expenses, right? So we had rent expense, we had salary, telephone, utility. Let me see if I can remember these. Uh so rent expense was how much? 1700. Okay, so 1700. Salary expense was 1820. Telephone expense was 388. Utility expense 368, right? And again, I just got this information from up top here, right? All of our revenues and expenses and the amounts. That data flowed down here to our income statement, right? We see that? All right, so let's look at this now. So we've got our revenue, we've got our expenses. Let's total them up. So equals the sum of all four of these. Okay, so there's our total expenses. And remember that formula, revenue, right? We've got it right here. Revenue minus expenses equals net income. So equals revenue minus expenses. Net income. So we have calculated net income, and there's our example of our income statement, right? Our first financial statement, the income statement. Net income. Revenue minus expenses equals net income. Okay, good. So that's our first one. The next one is our statement of owner's equity, okay? And so our statement of owner's equity, the formula for this, we've got beginning balance, and I'll be a little bit more specific. We can say beginning balance in capital plus net income minus drawings or owner withdraws equals ending balance. That's our formula for our statement of owner's equity. And of course, we're getting net income from our income statement, right? So that net income from our income statement flows to the statement of owner's equity as we are about to see. Okay, so statement of owner's equity. Let's work through this one together now. So beginning balance. Now, in this case, remember, this is a brand new company. This lawyer just started this law firm on October 1st. So in fact, on October 1st, there was zero equity, right? Because a beginning balance in equity would have been a balance carried forward from the previous month, a balance carried forward from September. But because we're a brand new company, we did not have any balance carried forward. So we're just adding net income. And we figured that out down here on our income statement. So there's net income, 13,502. And then we're going to subtract owner's drawings. Now, if we scroll back up here, let me erase the income statement stuff here. So now we scroll back up. Here's drawings, right? So that owner drawing amount that flows down here to drawings. So what do we have? 2,500 in drawings. Okay, so we take our net income minus drawings. So equals net income minus, and really the formula, just to be more accurate, would be beginning balance plus net income minus drawings. In our case, there was a zero beginning balance. So in Facnito, it's net income minus drawings, but nonetheless, we see that there. So that's our statement of owner equity. One thing that I didn't do here, is we need to add in, and I forgot about this with that beginning balance, is we need to add in the investment. So let me add that real quick, because so I forgot about, right, the owner investment we need to add in there too. When it's a brand new company, we also have that owner investment. So let's add that in too. And that is one step I forgot to add in. So add net income. Let me revise this a little bit. So add net income or owner investment would be another part of that as well, right? So add net income. And then underneath of this next line, we're going to add um owner investment. I don't know why I've got that. Wasn't thinking. Okay, owner investment is equal to owner capital investment, 27,800. Okay. So we're looking at equals our beginning balance plus our net income plus our investment minus our drawing. There we go. That looks better. That looks better. I forgot to add in that investment. So now 38,802. Yeah, that's better. Okay, good. All right, so we've completed our income statement. We've completed our statement of owner's equity. Finally, we're going to do our balance sheet. Now, remember our balance sheet, these show our assets, our liabilities, our equity. That's that basic accounting equation. So that's our formula that we're using for this, is we're using that basic accounting equation. So assets equal liabilities plus equity, right? That's that basic accounting equation. Assets equal liabilities plus equity. So all of that information again is up here, right? So we're going to start with our assets. Here are all of our asset amounts. And here are all of our asset accounts, right? So if we go down here, assets, and let me scroll back up just a little. So we've got cash equal to 31,970. We've got supplies equal to 418. We've got prepaid insurance equal to 944. We've got this is office equipment equal to 9,670 and library equal to 2,800. So there are all 5 of our assets. So we can total these up equals the sum of all of these together. So there's our total assets, 45,802. And that does match the number that we had up here, right? We already did have that for total assets. We're just putting it now in balance sheet format, right? That's what this is, balance sheet format. Okay, accounts payable. Again, we did have a balance in that AP account here. That is right here. Accounts payable had that balance of 7,000. So if we go down here to our balance sheet, AP 7,000. And then lastly is owner capital. And again, we want to use the balance we just calculated. So just like net income flowed up here to our statement of owner equity, now ending balance flows down to our equity section of our balance sheet. So we want to use this 38,802. All right, so lastly, we're going to take equals liabilities plus equity, 45,802. So just like that accounting equation tells us it should, total assets equal total liabilities and equity, right? So that's where we're going with it, ladies and gentlemen. And so this was again problem 1-3B, right? We see that down here, problem 1-3B, page 45 of our textbook. So hopefully that's helpful. I know that we have completed problems similar to this already, where we filled out this framework up here in class together. But now we're looking again at these financial statements because that's where we're going with it, right? Remember, that's the ultimate product of our work, right? We record all of our transactions through the month. And then at the end of the month, we prepare these financial statements to see, how much net income we earned, for example. What is our financial position, and what's the information on our balance sheet, right? So that's where we're going with it. So anyway, let me stop sharing this. Hello again. So I will get this posted, and I will send everybody the link to view this recorded lecture, and I hope that you all have a wonderful rest of your day. Bye-bye. Let me know if you have any questions, and I'll see you in class. Bye-bye.